Before we get into this year's forecast though, can we just look at how last year's forecast of yours actually turned out? First of all, let's look at in the top trends. You had said that there would be a long grind and no recession, but the consensus forecast, apart from you, was that recession will be led by the American economy. And you said there won't be a recession, there'll be a long grind, no deep, sharp recession. And in actual terms, there was no recession. There was a massive upside, in fact, in the American economy. Completely different from what everybody else forecast. So this was quite a major, you stuck your neck out here and it turned out okay.
Well, but to be fair, the American economy has done much better than even I or anyone expected it to be, because what we were expecting was that we would get some sort of a long grind, and yet the American economy has grown by 2.5%, which for an economy of America's size is a pretty significant growth rate, and even more significant because the rest of the world did not do as well. Europe, for example, almost had a recession. It skirted with a recession. China did very poorly over the past year, I think, as has been well documented. But there were two bright spots. There was US, and then there were emerging markets outside of China, including India, which were relatively resilient through this entire phase. So I think that in overall the global economy skirted a recession, and we forget that at this time last year, more than 60% of economists thought that the US economy was headed for a recession.
Amazing.
And that was quite a forecast, because in the entire history of forecasting, economists as a group have never ever predicted a recession.
Okay, and your second forecast was that the dollar would decline. And again, that went against what a lot of people were saying. In actual fact, the dollar did decline by 3%, which was again quite unexpected, and you were spot on there.
Yeah, and that's the dollar index, remember. So which is the fact that then it's skewed by a few currencies. In fact, a lot of currencies, more than half the currencies in the world last year appreciated against the US dollar. And some had pretty significant appreciation, including currencies in Latin America, currencies in Eastern Europe. Some of those countries' currencies appreciated quite significantly. The weakness was concentrated in really a handful of currencies. The Chinese currency weakened, the Japanese yen weakened, but most currencies last year appreciated against the US dollar, and yes, that went against the grain or the conversation at that time. And the rupee was remarkably stable. In fact, the rupee had arguably its most stable year last year in decades, and something the IMF and all have almost been complaining about, that the rupee has been too stable because the RBI has been intervening. But having said that, the dollar in general was either stable or depreciated against most currencies. The index as a whole was down by 3%, led by strength in a whole host of currencies around the world.
Here we see the American economy booming, going against everybody's prediction, and Biden's ratings are falling.
And the dollar too declined, despite the fact that the American economy itself was quite resilient, and interest rates in America went up quite a bit at the short end last year.
Right. Then the next forecast you did, your third forecast last year, was that global stock markets would rise more than the American stock market. In the actual fact, the American stock market went up 27%, and the rest of the world, the stock markets on average went up 15%. So that forecast was...
So that didn't work out, mainly because of the tech sector. That in America, what happened last year was that the mega cap tech stocks, Apple, Amazon, and increasingly stocks like Nvidia, these stocks surged last year. They got the label of the Magnificent Seven. And those 7 stocks were up more than 100%. So huge market value already entering into 2023, and then they more than doubled from that value. So that's what really led the American stock market higher. But the average American stock didn't do that well. In fact, if the equal weighted index in America had single digit type of returns outside of these mega cap tech stocks. But these mega cap tech stocks...
Basically, AI surprised everybody and changed the way the stock market moved and the tech sector, because your fourth forecast was that tech would shrink in 2023. In fact, tech went up 55%. A huge change. So
but
that
again,
was
led by those 7 stocks, because if you take those 7 stocks out, the rest of the tech sector didn't really do anywhere near as spectacularly. But overall, in terms of these were sort of related, and this is where things didn't play out as I expected, because the AI wave really came and swept and was very concentrated in just 7 companies
stocks,
as far as the returns are concerned.
And you will be looking at the tech stocks for this year ahead as well in next year's forecast, right?
Yeah, because it's such a large part of the landscape that you can't have any forecast for any year without the conversation
then
around these
I remember
stocks.
you talking about television, and it depressed a lot of media people. You said television will spend less money, but content will improve. In fact, what happened was television spend the growth did drop sharply. Instead of 25% per annum, it dropped to just 9% growth. That is a very significant drop. But the revenue per user went up. So you did get better revenues per user despite a drop in the growth of media.
Yeah, so that's what we were seeing at this time last year, which is the fact that people were going to cut down their budgets quite a bit. And my view was that there's just too much content out there, so getting some rationalization of content is likely to produce better quality, and seems it sort of played out that way if you just look at the numbers over the past year.
One of the big forecasts you made, Japan, which is really floundering for so long, you said Japan will come back. And did it come back? The Japanese stock market went up 25%. How did you see that, and what do you attribute it to?
Yeah, I think a combination of things, that if there's one country which could benefit from some inflation coming back, it was Japan. They were stuck in this deflationary trap. To get some inflation back, to get wages to start increasing, and then also their corporate shareholder structure has improved a lot. And you see a lot of confidence coming back in Japan. The residential real estate market in Tokyo has been dead for a long period of time. That's buzzing. Generally, the confidence in Japan came back. And I think some of that may have also got to do with the fact that they were feeling so outcompeted by China. And with China sort of slipping a bit, I think that also helped. So I think a combination of factors came back, and the Japanese stock market did very well. And also the fact that if you go to Japan now, the economy, the Tokyo residential real estate market, you see signs of much greater confidence in Japan.
You mentioned China, and you had said that global companies will move out of China last year. It was a bit ahead of the time, because towards the end of last year, it did seem to, everybody seemed to notice that, but you said it right at the beginning of the year. And look at that increase, or the investment from America. Actually, if you look at the right-hand side of the graph, to China went down, while to Mexico, Canada, Vietnam, Taiwan, and India to some extent, investment went up. So what went out of China came into these other countries.
Yeah, so in that way, globalization is sort of continuing. It just is that it's shifting its focus. So you have global companies that are moving out of China, especially the US ones, and the wage differential is still quite competitive. So they're going to a whole host of countries, from India to Indonesia. Mexico obviously has been the very big beneficiary of this trend. But yeah, China is losing share in every which way, and we'll speak about that more in the 2024 trends.
Yeah, okay. You'll be looking ahead at how China will fare this year.
Yes.
Your 8th forecast last year was that governments which had gone into wild kind of policies, there would be a return to orthodoxy and conservatism. In actual fact, many countries did return to conservative economic policies. Why did they change? And which are those countries that...
Right. So I think that the main thing here is this, that interest rates have gone up. The cost of financing has become much more expensive. And in this environment, that exerts a lot more discipline on countries, particularly in some of these emerging markets that are so reliant on external capital. So you saw last year that Turkey, Argentina, Nigeria, these were some of the basket case countries. And all these countries have seen a shift in their policy, often because the leadership also has shifted. So I think that was a big shift.
In fact, your next forecast, which we'll just show, was that the stock markets would go up after elections in various countries. And just look at them, they really climbed after elections. Argentina, stock market up 31%, Turkey 29%, Poland 27%, Nigeria 4%, only Thailand down 4%.
Yeah.
But generally, your forecast that after elections, stock market would go up did happen in all these countries.
Yeah, because my forecast was the fact that as you anticipate new leaders, markets share that because they think the new leaders will come, they'll bring a fresh policy focus, they will carry out economic reforms, and so that's what will lift markets. This is a study that I've done, and we in fact spoke about that many years ago, that the best returns for a stock market in any developing country typically tend to be in the first 6 to 18 months of a new leader coming to power. When the new leader comes to power, you get a lot of
It's all about hope and then reality by
yes.
Right. Then you said, and this is the last 10th forecast, which you made early last year, which there was a lot of gloomy feeling. And you said in this period, look for bluebirds, not black swans. And because they're going to be like lower inflation, you said. Don't think that inflation is going to shoot up and that growth rates are going to plummet like the black swan perspective. In fact, there was stronger growth and lower inflation, which led to solid returns on the stock market.
Yeah, so my entire point at that point in time was that we ended 2022. And when we did the show in early 23, with so much gloom out there.
Yeah.
There was the war in Ukraine, and as we said at the outset of the show, more than 60% of economists thought we were going to have a recession. So there was this very negative mindset. And I said that when you have such a negative mindset, it won't take much to surprise on the upside. And at least from an economic perspective, I think we had more positive than negative surprises. I know we had the shock of the Israel-Hamas conflict in October, but generally as a year last year, when we look back at it from an economic, from a financial perspective, especially compared to expectations, it ended up being a broadly good year.